You know what drives me absolutely crazy? I was scrolling through social media last week and saw yet another so-called tax expert telling business owners they can write off their daily meals, their designer clothes, even their personal chef, as long as they talk about business. Here's the problem. That advice will get you audited faster than you can say business deduction. Hey there, welcome back to the channel. I'm Tiffany Phillips, and I help business owners legally reduce their taxes and keep more of what they earn. And if this video saves you even $1 in taxes, smash that like button and subscribe for more tax saving strategies. I post new videos every week to help you keep more of your hard-earned money. Today, I'm showing you the top 10 biggest tax write-offs that actually work. Strategies that are completely legal and audit-proof when done correctly. Let's start with the biggest missed opportunity that I see, the Qualified Business Income Deduction, or QBI. This is literally a 20% write-off against all your business income. Someone making $100,000 in business income gets a $20,000 deduction just for being a business owner. That's about $5,000 in tax savings that most people are leaving on the table. You automatically qualify for the full deduction if you're single, making less than $197,300, or married filing jointly, making less than $394,600. Now, here's where it gets really powerful. Depreciation. This is money you get to write off that actually doesn't cost you anything out of pocket. Sarah bought a $10,000 camera for her photography business. With Section 179 depreciation, she can write off the entire $10,000 in year one. That's about $2,400 in tax savings. And here's what most people don't know. You can use this for equipment you already own. Bought a computer for personal use 3 years ago? Get it appraised, allocate it to your business, and take the depreciation deduction. Comment depreciation below if you're starting to see how powerful this is. Now let's talk about one of the biggest deductions most business owners are underutilizing, their vehicle. Even if your car is in your personal name, you can write off the business use. Whether you use it 100% for business or just 5%, you can deduct that business portion. Here's where it gets interesting. Let's say you have a 6,000-pound SUV that you bought for $60,000. With bonus depreciation, you can now write off the full 100% deduction in the first year with the new tax laws that came out in 2025. So if you spend $20,000 on vehicle expenses and use it 50% for business, you get $10,000 in actual expenses plus the depreciation. That's $40,000 in total deductions. The standard mileage method gives you 70 cents per business mile in 2025. It does change every year, so make sure you check to see what it is at the time of you watching this video. So if you drive 20,000 business miles, that's $14,000 in deductions. Drop a comment telling me which method sounds better for your specific situation. Business use includes driving to meet clients, going to the bank for business, picking up supplies, even driving to your accountant's office. It all counts. One of the most underutilized deductions is the home office deduction, and it's because too many CPAs are scared of it. They think it's a red flag for audits, and that's complete nonsense. If you have space in your home used exclusively for business, you can deduct a portion of your home expenses. Let's say you have $100,000 in total home expenses and use 10% of your home for business. You can deduct $10,000. That's about $2,400 in tax savings. But here's what makes this even more powerful. You can also depreciate the business portion of your home. If your home is worth $500,000 and you use 10% for business, you can depreciate $50,000 over 39 years. I had a client, Michael, who wasn't taking this deduction because his previous CPA said it was too risky. We calculated his home office deduction at $12,000 per year. Over 3 years, that was $36,000 in lost deductions, about $8,000 in additional taxes he didn't have to pay. If you're working from home and not taking this deduction, smash that like button and let's get that fixed. Now, let's clear up the confusion around meal deductions because there's so much bad information out there. You can deduct business meals when you're discussing business with a business contact. The key is having a legitimate business purpose and a business contact present. Currently, most business meals are 50% deductible. You need to keep the receipt and note what business was discussed. But here's what the social media experts get wrong. You can't just deduct every meal because you think about business while eating. You need another person present who you're conducting business with. Travel is incredibly powerful when done correctly. If you travel for business, your transportation, lodging, and meals can all be deductible. Here's a strategy most people miss. If you travel for business during the week and stay over the weekend costs can be deductible if it's cheaper than flying back and forth. Jennifer attended a conference in San Diego. Instead of flying back Friday night, she stayed through Sunday because it was cheaper. Her weekend hotel and meals were fully deductible. Comment travel if you've been missing out on these deductions. For entertainment, the rules changed in 2017. Most entertainment expenses aren't deductible anymore. No more golf outings or sporting events. But there's an exception. If the entertainment is primarily for employees, it can be 100% deductible. Now let's talk about advanced strategies that can create massive deductions. Self-employed retirement plans are incredibly powerful. With a solo 401k, you can contribute up to $70,000 per year in 2025. If you don't have employees and you're under 50, self-employed retirement plans are incredibly powerful. With a solo 401k, you can contribute up to $70,000 per year in 2025 if you don't have employees and you're under 50. Over 50, add a $7,500 catch-up, bringing your total to $77,500. If you're between 60 and 63, some plans allow an enhanced catch-up of $11,250, potentially getting you to $81,250 in total contributions. These numbers are going up in 2026. The total limits rise to $72,000 for those under 50 or $80,000 with catch-up contributions. Health savings accounts are what I call the triple threat of tax benefits. You get a deduction going in, tax-free growth, and tax-free withdrawals for medical expenses. In 2025, you can contribute $4,300 for individual coverage or $8,500 for family coverage. 55 or older, an extra $1,000. But here's the secret. You don't have to spend the money right away. You can invest it and let it grow, then reimburse yourself for medical expenses years later. If you're loving these advanced strategies, make sure you're subscribed because I have so much more coming your way. Here's what you need to understand. The tax code isn't your enemy. 99.5% of tax laws are written to help you save money, not make you pay more. The problem is most business owners are getting their tax advice from social media influencers who don't understand the law or from CPAs who are too scared to implement legitimate strategies. Every deduction I've shared today is completely legal and audit-proof when done correctly. These aren't loopholes, they're intentional incentives built into the tax code. Now, if you want to dive deeper into these strategies and learn the 10 most powerful tax reduction techniques I use with my clients, I've written Your Biggest Expense: How to Legally Pay Less in Taxes and Keep More Wealth. You can get it at yourbiggestexpense.com. I'm including over $900 in bonuses to help you implement these strategies immediately. Your biggest expense isn't your rent or payroll, it's your taxes. And unlike your other expenses, you have significant control over how much you pay. Before you go, smash that like button if this video opened your eyes to new possibilities. Subscribe and hit the notification bell so you never miss a money-saving strategy. And drop a comment telling me which deduction you're most excited to start using. And if you liked this video, make sure to check out my others where I dive even deeper into tax strategies that can transform your financial future. Remember, you work too hard for your money to give more of it away than you have to. The strategies exist. The deductions are there. The question is, are you going to take advantage of them? Remember, it's not what you make, it's what you keep. So keep more.